Hello, Jamie. How's
Hey
Scott?
everybody, Scott, Steve, happy Monday and happy Monday to everybody in attendance. Okay, all
Yo.
right. So we got the happy Mondays out of the way here. So without
Yeah.
further ado,
Uh,
let's just make the lawyers happy real quick here. So just want to make everybody in attendance aware of the fact, whether it's this webinar or any of the other ones that we host throughout the week, which are about 9 of them, that we share all this information with you for educational purposes only. So please do not misconstrue anything that we say as investment advice. If you do need investment advice, please seek out a registered investment advisor or a registered stockbroker, Series 7, somebody that can help you out with buy, sell, what do I do type information. Okay, I think that will suffice. And before we get going here, just for the new people who might be joining us for the first time, I want to make you aware of the fact that not only do we have one-of-a-kind scanning software, but we've built quite the community around that. Part of that community consists of these daily webinars throughout the week that start at 5 p.m. Eastern. Of course, today is office hours with myself and Steve, but not to skip this first point up here, the trading room hosted by Barry. It's a great resource. We don't charge anything for it. And there are hundreds of traders in there on a daily basis. The room opens up 30 minutes before the market. And the best thing about it is Barry, because he's showcasing his trading style and showing everyone how he uses the technology to trade and find his place. So once again, the best thing about that room, other than Barry, of course, is the fact that it doesn't cost anything. And if you've perused the web and did your homework, you know that to get a trading room of this caliber is typically going to cost you probably about $100 or so, but we provide it to our users for free. So if you haven't been taking advantage of that resource, get in there and do that. Of course, today's office hours with myself and Steve. We've got Steve taking the helm tomorrow on Tuesday for the trade of the week. Andy Lindloff rides shotgun with him. And of course, as always, hump day comes around the middle of the week. We like to change it up a little bit. And we bring in Dan, the CEO, and Brad, our CTO, always entertaining there as well. And Andy's going to round out the 5 p.m. Eastern webinars on Thursday with his trading studio, and I ride shotgun with him. And of course, you can see in the bottom right here, Friday support webinar, very popular. It's designed to be a 2 to 3 hour webinar starting at 11 a.m. Eastern time, and depending on the crowd, we'll go 2, sometimes 3 hours in there, and it's pretty much anything TI related. So no waiting. If you need technical help, just jump in the Friday support session. In addition to that, we've added just recently 4 additional webinars Monday through Thursday that we call TI University. Mondays is 101 beginners, Tuesdays 201, and just progressing through the week. I do the 401 on Thursday, the advanced. So once again, a great resource to learn and not have to wait. You just sign up for these guys through the website. We'll kind of hit those points at the end here, show you how to get to those sign up pages. But you know, especially if you're new, start signing up for these things. It's a great way to get over the learning curve a lot quicker, and that's always a good thing. Now, of course, we always like to show this because back in 2016 is when we first brought Holly 1.0 online. And of course, we can see our user growth since that AI. And by the way, we've got 3 of them now. So we're going to be taking a peek at all 3, talking about what the differences might be, talking about the same stuff that we always do, how to interact with the AI, risk on, how to attack risk on from a trade-by-trade basis, as well as some other things that we'll get to here in a minute. We are in a bull market, that is clear, right? Now, of course, we've had a little correction, which everybody was kind of going, well, is this the end? Is it time to go down now? And of course, what we did a while back is put together a book, an ebook that's free to download just by going to this address here, tradeIdeas.com/ebook. It was put together by myself, Sean, Andy, and Steve about, you know, what are you going to do when this, you know, buy the dip market ends? Right now, it looks like we're heading back to highs and Maybe we'll go higher, maybe not, but eventually the market will turn, and it's better to be prepared for this stuff in advance than trying to scramble when the action is down and trying to get used to short selling. You can see we released the book about right here. It was kind of good timing because that's when we had the little correction, so to speak, and now we're on the way back up. But as Steve likes to say, chance favors the prepared mind. So get prepared now so that when the market does turn to a bear market, you'll be comfortable with short selling. And that's basically what the book was designed to do. And the good thing about the book is it's free. So just hit this address right here, download the book, you'll be good to go and you'll be prepared. All right, so getting into today's class, you're going to see a lot of the things that we talk about all the time. Not to be repetitive, but these things work. It's more of a methodology that we're talking about here. And, you know, expectations are always very important. We're going to talk about what the CC windows showed today. Very strong buying bias in the first 15 minutes or so. Pretty significant, above 60%. We'll get into the hollies and the three of them and do examples of trades using risk on and a good trade around that materialized today as well. We will also talk about your Holly homework, scanning Holly, all of her trades, checking out the daily charts and setting those price alerts. And I've already went through all of them today and picked out the ones I like, so I'll share those with you guys at the end of the webinar here. The ones from last week got up pretty good to the tune of about 1.5 to 2 points before they started showing a little degradation there. But it was only about 3 of them that fired. So we'll see what happens this week. And then, of course, the good old standards, the good old standbys that are always here. We'll talk about some nice setups that came from the turbo up, no resistance. So having said that, Steve, I guess if you're ready,
Jamie,
I'll
sure.
flip it over to you, and you can do your thing with the markets in general.
Hey there, hi there, ho there. You're as welcome as can be. All right, you should have a clean view of my screen. I went ahead and opened up my daily chart a little bit, as that's where my focus is going to be. I'm going to go through the 4 main ETFs and a couple other things of note. Always starting off with the S&P 500. That's the benchmark, and this is a much different looking market than it was back here when Jamie was showing you the book being released and that vomitosis of high volume that we had the following week. Well, we've since kind of worked it out, once again banging on that 200-day moving average and then moving higher, building a higher base camp here. Got a little bit of a range bound here, a head fake, and then a push through that range. So now we're back in the assault range, as I would call it, not no man's land, but the assault range of trying to clear this orange line here, which is basically that high going back. Now at the all-time high, we still have some work to do for that, but the next order of business is going to be this level of supply up here. And, you know, judging by the nice little steady trend we've had, a couple of red candles, many green candles, but for the most part, moving higher. I see no sound. I'm assuming you guys hear me, so I'm sorry, Liz, you're not hearing us. You're hearing me, right, Jamie?
Yes, loud and clear. And maybe, Liz, if it doesn't clear up, try logging out, logging back in, see if that fixes it.
Send her probably, if she can't hear anybody or see anybody else's, we might have to send her a note. So after a couple of really nice, probably just 2 weeks flat here in a row, we ended the day with a little bit of a wick up there on the upside. But, you know, we're back here in this sweet spot, I'll call this level, because as long as we stay above this downside orange line, which was prior resistance, became support the following 2 days, and now we're just drifting higher on it. You know, I don't try to get caught up on just I don't try to get too caught up on just what a single candle is doing. You know, we got to look at the bigger picture, and the bigger picture is we've had a nice move higher from these lows down here. We're still very much, you know, in play for a sideways or even a pullback, consolidation, backing and filling, whatever you want to call it. But that's the S&P. The short sellers are not happy. The short sellers needed this day right here to follow through back down to the downside and pound on this 200-day moving average some more. So they're not getting what they want. So the momentum wheel of short covering continues. and should keep moving the price, should keep moving the prices higher. But the levels that I'm identifying for you here in the horizontal specs, these are pivot levels to watch. So we need to keep closing above this 274.15. We need to, sometime in the near future, make an assault here to this 280.38 level, which was prior resistance. Where we go from here, I don't know. We're in kind of the summer months now, kind of slogging along. Look at the relative volume here, 0.89. Just a hair below normal volume for the S&Ps that day, today. Let's take a look at the Qs. All right, interesting in the Qs, and that they've actually gone back and taken out that prior high. So the Qs are showing a lot of strength, a lot of relative strength compared to what the Dow and the S&P is doing. And the lines that I'm drawing here on the Q, well, it's nothing more than recent all-time highs about 4 days ago. That's the line that we need to keep attacking on the way up. Yesterday, a red candle here, a little pullback here. Believe it or not, sometimes, guys, that can be enough to keep a strong bull market intact. So notice the fanning moving averages I like to look at. Here's my 10, my 20, and my 50 SMAs. They're all fanned out, not to be confused with the mess that we were in back here of all crossing back and forth, up and down. No, we're back in kind of the paths of least resistance is being shown to us, and this rising 10-period moving average hasn't even caught the pullback once. And that, to me, is always a even more bullish sign. Like two magnets on the same polarized end. They don't want to get anywhere near each other. Well, when I see the price pull back and act like that same polar magnet effect there on my 10-period moving average, and it pops back up, that's just telling me the underlying strength may be even more than I anticipated. So that's one observation. The Qs are very strong and be the technology, have technology be the leadership rotation of this market. Let's look at the two lesser knowns. I'll start with the Dow. The Dow is kind of lowly. If you look way back here, the all-time high on the Dow is way back here, and we're still got some work to do on these recent lows, lower highs back here. But the Dow's, bounced like the rest of the market and also kind of put in a little spinning top. Maybe this is ready for some consolidation, either sideways or price. Remember, guys, there's two ways that price action can consolidate. It can consolidate over time, which means it's going sideways, and that's the more bullish of the two, or it can consolidate in price and pull back for a little bit of backfill. There's a tiny little gap right there it may want, but for the most part, we don't want to see a pullback and a close below this downside line, because where it was once resistance, we want it to continue to remain a support. And then lastly, on the 4 ETFs, IWM is just as strong as the NASDAQ, if not stronger. It's been plugging higher. So small caps, keep an eye on the small caps. If you're seeing an observation, whether it be through Holly on the Mighty Mouse strategy or the little big guy strategy, those are strategies designed for small cap stocks under $5 or $10. And so just keep in the back of your mind, guys, that the coast is really looking strong here for small cap Russell 2000 stocks and also the technology laden QQQ. That seems to be where our leadership is. But I've done the same thing here. I've drawn some very obvious lines. Here's a pivot line where support became resistance, resistance here, and broke through and came back and tested it as support. Let's think about this for a second, guys. All stocks will, not all stocks, but many stocks will do this. This is not just native to looking at the index ETFs. All right, this is what price action does. It breaks through and then it comes back and it retests. So let's say you've heard me say before, wow, this thing's already broken through and had 4 candles. Please don't be the guy that just bought the 4th candle as it broke through the resistance. Anticipate and hope that you're going to get a second chance. Sometimes the second mouse might get the cheese too. So the pullback comes back and tests that pivot point and closes above it. That could be a wonderful secondary opportunity right here for the people that wanted to go long up here but were afraid of jumping into too long of a train without a pullback. And again, this happens on any single stock chart you're looking at. If you feel like you were too late and you missed the train and you don't want to chase the train leaving the station, well then look for where the prior resistance and breakout pivot was. Set an alert and see if the alert triggers it, and then watch and see how it trades that day. If it bounces and closes above it, well, maybe you can take a position swing trade at the close that day because it showed you that it tried to breach that and could not close below it. It actually did what we wanted as a bull and bounced right back up into play. So again, if you feel like you missed that first push through, you're very much correct being scared. You should be very scared to be buying the 5th green candle in a row as it pushes through. But you'll have an opportunity if you're just patient and set some price alerts a little bit lower. You might be surprised that in a few days you'll get a a message that will go, oh, that's right. Oh, look at this. I forgot about this. Hey, it pulled back to the pivot line. This might be a very sensible, conservative entry point. And of course, our stop would be not too much lower, but very tight because we determined that this pivot line was in fact working. All right, so the IWM is extremely healthy. I would not want to see the IWM actually pull back and break below 163 right here. This was the very next level of resistance. So as we're talking, maybe if it stalls out up here at the all-time highs, it pulls back and gives us a little kiss back at this pivot line just to remind us that price action likes to retest breakouts and pivot lines and draw pivot lines with confirmation of pullback. That could happen in the IWM. Real quickly, one of the things the market was scared about last week was Italy, and this is the EWI Italy ETF. And what we can see today is after we came out of the weekend, a really nice gap up bounce, and then a follow through green candle. So for the moment, people or institutions that were scared or watching the credit default swaps in Italy rise quickly into junk bond status to try and attract investors, that's usually a giant red flag for sovereignty problems in countries. But it appears today kind of took us out of the woods, at least for the moment, on that. And then lastly, the trade of the week, I'll go over that again tomorrow, was in X Steel. Just really like the Holly buy tag that brought it to our attention last week. Love the wedge forming here. And there's always the possibility, I don't usually do that, but there's always a possibility that global tariff news could trigger something that would be a catalyst, and if it triggers back above these highs, then this thing could have a nice day. I did see some news after hours though on X coming through talking about 800 new workers in their Illinois plant. Let's see if the price action's that's rather dead, not really reacting to that much, so that's not too much of an interest. But guys, I'll have more to talk about on Trade of the Week tomorrow night. That's our topic of US Steel. But that's it. The path of least resistance remains up. Keep an eye on those pivot lines. Don't chase stock. Let it pull back to the levels of entry, and you might be surprised how easy and less anxious and less emotional you can be when you take those types of entries. All right, that's all I got, Jamie.
Good stuff, Steve. Let me grab it back here. All righty. All right, you got eyes back on me now, Steve?
Eyes and ears.
Okay, perfect. All right, thank you very much, Steve. All right, so let's talk about expectations leading into the session today. Okay, so readings were about the open. So here's what they looked like 15 minutes into the open. Now keep in mind this compare count window is looking only at stocks capitalized above $4 billion as far as the market cap goes. And what it's doing is it's looking at stocks of that caliber hitting highs and lows, but with accelerated 1 minute volume in the first 15 minutes or so. And the point here is to try to get a little bit of a read on what the institutions might be up to, okay? Because they pretty much leave digital footprints, and we can use a window like this to attempt to track them. Of course, it's not foolproof, it's not guaranteed, but it is pretty interesting here, especially on a day like today. Now, some of you who attend on the regulars have heard me talk about these windows and say, I don't like for the first 15 minutes to be real stretched out, have a big wide range bar. And of course, today was one of those days where we had a pretty tame opening here. Keep in mind, these are 15-minute bars. I usually have 5 minutes up here, but becoming more and more partial to the 15 minutes, especially, after the first hour or so, not near as much noise. And of course, the 10-period SMA here that Steve turned me on to, I've really fallen in love with that study. So what do we have? We had 63% accelerated buying or stocks hitting highs in the first 15 minutes versus stocks hitting lows with accelerated volume, 63%. That's a very significant bias. Typically, we like to see anything above 50. Things start, my ears start perking up, my eyes start perking up above 55. But boy, 63% today, and that was at the end of the opening 15-minute bar here. So what did we do? We just went sideways, popped that new high, and then drifted higher. All right, so this was a very accurate reading. We did have a follow-through higher. It's just the market didn't have a whole lot of steam in it today as far as continuations. Take a look at the relative volumes here on the SPY and the QQQ tracking ETFs, just slightly below normal. Looks like the IWM was a little bit above, and the Dow. All right. So a nice upward move, a nice tip of the hat. Maybe we'll go higher tomorrow. But, you know, as far as what we had today, this was pretty much it. There were a lot of stocks emulating the same pattern to where we did get a good little lift. But if you didn't take your money, it didn't stick around for very long, and you're back to flat and maybe even down in some positions here. So as far as expectations go, this is what I had after the first 15 minutes. Looks like we're going to drift higher, and that turned out to be the case. So let's just pop back around here. And now let's talk about Holly, right? And of course, we've got 3 different Hollys now. So want to talk to you guys a little bit about some risk-on trades here, how to interact with Holly in risk-on format. And then we'll talk about doing your Holly homework, which just, it got about 3 times. You just got 3 times as much homework because there used to be 1 Holly, now we have 3. So 3 times the amount of trades to peruse, but it really doesn't take that long once you get the hang of it here. So let's talk about the Hollys, plural, these today and what went on there. So let's see, which one am I on currently? I'm on Neo right now, which is number 3 in the list. I'm going to right click, go down here to segments. Let's just start with Holly 1.0. So we can see Holly 1.0 today. Risk off, won the fight, 72 cents on 12 trades here. And we can see all the trades right here. And nothing is really sticking out significantly as far as risk on goes. I've sorted the trades here for Holly 1.0 on risk on, and we can see the spreads here. A little bit of a spread here between 42 cents and 51 cents for the VCPH trade. Usually we like to see a little bit bigger here, bigger of a spread, but it just wasn't meant to be today because the market did not continue in a strong fashion. Hit the top and roll back over. So usually what we're doing here is trying to get a little bit of that spread, but you know, 9 cents being the biggest spread on this batch of trades, and then less here. This one might be interesting though, the BSTI. So we could use this as a pretty decent example of interacting with Holly and going risk on. So we can see all of the metrics populate over here when I double clicked, and this was Holly's entry. Now something's not making a lot of sense here, Steve. Okay, we're barely higher than where she got out. So she must have got out at the bottom of this 15-minute candle here.
The end, at the end of the coloring there.
Why did she get out? Profit save, all right? Which, by the way, profit save gives her the ability to get out of a winning trade sooner than the hold time. On the other side of the coin,
stop.
On the other side of that coin, reduced risk allows her to bail on a losing position earlier than normal in an attempt to lose less than the stop loss. So on this guy right here, she gets into the entry. We can see that the colorized area right here is Holly in the trade risk off. So she got profitable, then we got some sideways movement. Sometimes it's sideways movement, sometimes it's just barely a down move, but the longer that she's in the trade and it's not working, then there's a time decay effect that kicks in, and the smaller that time, that increment of time gets, the more likely she is to bail on the trade early on a profit save or a reduced risk. So what is this telling us here? Well, Holly closed the trade out for a flat, you know, basically right where she bought it. Now it did get up. That's what this column right here can bring some interesting light to things, because she was up 25 cents at this point right here. Now, when we're interacting with Holly, and of course I haven't been going over this column lately, I forgot about it, but it's really one of my favorite columns because, well, if we sort by it, we can see that out of half the battle for new traders, old traders alike, is making an entry and getting in the money, right? And then of course, the other side of the coin is managing that trade, protecting the profits, so forth and so on. But just the fact that out of 12 trades, they were all in the money at some point, that's not an easy thing to pull off for a human. You know, I doubt very seriously that I could do it on a consistent basis. And that's not to take into account that we're actually taking this, but just having that amount of trades in the money and having the ability to take profits in them is not easy. So on this little guy right here, we've got 0 that Holly made and 23 cents if we held it to the close. So we can see slightly above the blue line there if we held 3 cents as opposed to flatting it with Holly. Now the good news about this one, never really came close to the stop loss. Depending on the type of trader you are, it's always, what I recommend is doing a little bit of both, right? We see Holly getting out, you're trying to get used to risk off, risk on, peel out a half with her, keep your hard stop, see what happens. And on this one, it would have worked out in our favor. So usually there's a lot more to go over, but just because of the nature of the market today, we don't see a whole lot on Holly 1.0. So once again, 72 cents on risk off on 12 trades. Now let's take a look at Holly 2.0. So risk off 91 cents on 12 trades. If you would have held everything, you would have been down 90 cents on 12 trades. Now at one point, this guy was way up on risk on. Of course, that's going to, coincide with us peeling off and profit trades at one point of the day. So we have to always keep that in mind, right? Once we get up a certain amount, whether it's Holly trades or anything else, well, then we have to start taking some of those gains off the table, whether it's a half lot, full lot. If you do the half lot, adjust your stop losses to a break even or some type of trailing stop. Sometimes we get paid when the market continues, but if we're adhering to reasonable risk management, whether it's going risk on with Holly, keeping the other half, or doing the half and half theory, then we're always taking something. We're taking some of those cookies, and then on the days where the market pushes through, we get rewarded additionally. And sometimes it's on a trade by trade basis that we get rewarded additionally based on what the chart is telling us. So let's do the same thing here. And Steve, I want to make sure that I was looking at the right thing here because, okay, just want to make sure 12 trades on Holly 1.0,
okay,
and very similar metrics on Holly 2.0. 12 trades, but risk off 91 cents versus the 72. And of course, when we sort by risk on here, we've got quarterback right here, which by the way, fit was an awesome entry today. Holly booked a 21 center in it. And at one point in time, this thing was a lot higher. I think we were pushing almost 10% on that risk on profit at one point in the day, but just a nice tight little entry here, and then it was off to the races. Notice the 10-period SMA in this one as well. Steve likes to say it's the guiding hand when there's a stock really in play. If the volume is there and we can see, hey, look what Fit's relative volume was. Now, I don't recall exactly what it was back here, but when you see Holly plays and you pull them up, of course, we're going to be looking at the pattern as well, but always take a glance at that relative volume. What I've been doing here lately and what I did today is just focused on the ones that had the really high relative volume. Fit was one of them, and we can see about as pain-free of a trade as you can get from this entry point here. And Holly, why did she get out of it? Timed exit. So this one ran the whole gamut from the quarterback. We can see here, quarterback's designed around a 45-minute hold time. So that's exactly what happened. She's programmed to get out after 45 minutes, and she got out about right here. But when we see this, and we're like, man, this thing's working nicely, we're getting some sideways action, perfect time to either go risk on or do the 50-50 dance, right? Peel out of 100 if you're in 200, take that risk off money, set your stop for whatever you're comfortable with. You could have stayed in this one with a break even or sticking to the original hard stop. None of those would have got violated, and we would have had some really nice extra profit in here to take advantage of. And of course, anytime we see volume numbers like this, and from a relative volume perspective, sometimes it's very early in the day when Holly's spitting these things out, first 15 minutes, first 30, 45, or an hour. So, the further away we get from the open and we're seeing these relative volume numbers hold, then the better the odds that the volume is going to stay in it for the remainder. On the same token, quarterback also produced this little guy right here. Now, this is a great example of what we call a trade around. All right. So I saw this one when Holly was down in it a little bit. You know, this one came out 9/11 right here. That's Pacific Standard Time. And, you know, I was scrolling through the Holly, you know, variants here, and I'm like, this one looks interesting. It's down a little bit. Now we can see I came across it during this red bar right here, probably was only about halfway through, and I'm thinking to myself, okay, well, let's give it some time. Let's see if it even flirts with the stop loss. And then while I'm looking at it, guess what I noticed right here? The relative volume. What do? They're also in the finance, you know, rental services, portable storage, all that stuff. Started digging around on the good old news service called Twitter. You just put the $ GFN in there, and lo and behold, what was going on there? The insiders had been buying a ton of stock, right? So we got the insiders buying a ton of stock. We got it in play today. We got Holly calling it out from a statistical standpoint. GFN, once again, quarterback, which came into the session at 62.2%. And then when we look at the daily, what do we see? All right. Well, I'll squish my chart up as much as I can. This just also happened to be flirting with all-time highs. So you got a stock that the insiders are piling into. Not that that ever really means anything, but that's what was happening today. Maybe it does. But the important thing was the volume and the fact that we had the opportunity to get a better price than Holly and have the thing work. And then as it tightened up, you can see this nice little wedge that formed, all the while riding the 10-period SMA, and then boom, 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 higher into the close. Now, this is definitely one that you'll probably want to keep your eyes peeled for tomorrow. Maybe it gaps up, which, you know, I hope it does, and I hope it opens up and has some volume in it. It would make for a really nice entry, but who knows? It might gap up, but we'll find out tomorrow. So a couple of the ones where the volume was really high that happened to continue, and you could have made more money in the risk on format there. So once again, not a whole lot to talk about as far as risk on this guy. Now let's flip over to the third version of Holly, which is Holly Neo. So Holly Neo finished the day a little bit up on risk on, but of course, keeping with tradition, since the market rolled over, risk on of 89 cents on 22 trades. A little bit trade happy today on this version, but we at least have a couple of examples of risk on to take a look at here. Let's pick up LE. Quarterback was just all over the place today, Steve. So we can see here, Holly gets into it right here. What does she get? She gets that sideways motion. Once again, gets a little jittery, pulls the plug on reduced risk for a flat, right? All we have to do is look at this, decide if we're comfortable with it. Maybe we take a look at the daily, try to get a little expectations of how high the thing might go. But of course here, Holly gets out, flats it. Basically all we had to do here is go, well, it's not running up tremendously, but it's going sideways. That's not necessarily a bad thing. So I'm going to stay in this thing, stick to my original hard stop, and by the time the close came around, as opposed to a flat, 50 cents in the money. Different one here from a different stock, GWRE. Holly, once again, gets into it here, bails out for basically another flat here, and once again, all we had to do was stick to a hard stop until that second part of the move came. So at this point in time, I would like to ask, is anybody fuzzy on risk off from a trade by trade basis? If you have a specific question about it, go ahead and let me know, and I'll try to dig down a little bit deeper into it. But you know, the gist of it is, when Holly's getting out of something, the easiest way to get used to it in the beginning is do a little bit of both, assuming you like what the chart is doing and the proximity to the stop loss, so forth and so on. So difference between risk on, deciding to go risk on, and then using something like this as a trade around, where we see Holly make the entry, get down a little bit in it, where we can actually get a better price in it, because sometimes the timing is just slightly off. You know, how many times have you bought a stock and, you know, instead of being green immediately, zip, 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 the algos take over, you're down 20 or 30 cents. That's not a lot of fun, right? But it does happen. But when Holly's doing it, of course, we can't be in every trade that Holly's doing, especially with 3 different versions of her. So once the AIs have started to pile in, there can be some very good trades found by looking at the ones that she's down in, but aren't, you know, just blowing through the stop losses. Maybe they're getting about halfway down, and then we start to see a little upturn. You know, like for example, once this bar closed, we started getting back up into this area right here in a wick. A lot of the times, that's a good little riskless, not riskless, but you know, a good guidepost to get us in when Holly is down on a trade. John, right now you cannot have all 3 versions of Holly open. That is in the development pipeline, and you will be able to do that soon. Now, the first thing that's going to, the first stage of that is we're going to have a new version available soon. So before we get to the nice GUI where you can have a window of every Holly open, the bridge piece to that level is you're going to have a P&L listed on the channel bar here for Neo 2.0 and Holly Grail, which is showing you the real-time P&L. That'll be the bridge so that everybody can get a glimpse without having to come down here and flip to the segments, because we don't like it any more than you guys do, having to flip back and forth. Plus, it doesn't keep you in sync real good. So once again, the first phase will have the P&Ls showing in the channel bars for each respective Holly, and then hopefully sooner than later, you will be able to spawn each, you know, all the strategy windows for all the Hollies and have all of them up in real time. Okay, so waiting for name, do both risk on and off come with a stop loss? Well, there's just one stop loss, okay? The same stop loss is going to be applicable for risk on and risk off. The difference is risk on is just showing us what's happening if we're holding all of these things, as opposed to getting out with Holly on the stop loss or the profit target or the timed hold, or the other 2, which are reduced risk and profit save. All right, let's just do a little time check here. We're doing all right. So that's pretty much it for Holly today. No matter what version that we're looking at, the risk on methodology on a trade-by-trade basis is pretty much the same here. One more that we didn't look at here. Well, we did look at the LE. I don't think we looked at the SCWX, but it's the same old song and dance. Once we have the entry, nice little march up, Holly gets out. That one went the whole time duration as well. And of course, up here, it wouldn't have been that hard of a decision to go, well, it's working so far, no pullbacks yet. So we could have easily pulled out of 1, taken our 30, you know, if we were in 200, could have taken our 32 cents with Holly, and then had the potential to get a little bit more here. And of course, the name of the game here, we're never going to top pick everything. But even if we can get a nickel of the risk on, risk off spread, a dime over the long term, that really does make a huge impact in your results, you know, on a cumulative basis. So David, are there any descriptions detailing the differences between all of the Hollies? We have not created a document for that yet. It's mainly been in these webinars. I know Dan really likes to go into the theory behind them on his Wednesdays webinar, so you might want to check that one out and get a little bit different of an idea from the way Dan likes to describe it. As far as I can tell, Holly Neo is a little bit more lax on the exits right now. I think they've modified the reduced risk and the profit save.
Yeah, they've
Holly 1.
loosened up the risk exits on that one a little bit to try and let it breathe a little bit more, I think.
Okay. So that's really the difference between the two or the three Hollies right now. Neo acts a little bit different and, you know, is a little bit more lax on the reduced risk and the profit saves right now. But we're learning just as all of you are. So it's going to be interesting moving forward to see, hey, one might perform better than the others on a gap up day. One might do better on a gap down day, flat day, run up day. So, you know, it'll be really interesting once we get a month of data under the belts, because as, you know, we've been charting Holly 1.0's progress, you know, once we get some data under the belt, we'll be able to compare all three AIs and, you know, actually have some data sets to look at to help us define, well, this one's stronger on this day or this one's weaker on this day. So once again, we're all going through this at the same time here. And, you know, we'll attempt to share our views with it as we progress, but there's no substitute for time and data. So the more time and data we get under our belts, the more interesting observations we'll be able to make. All right, so that's about it for the Hollies today. And of course, I always like to go over my bread and butter tickers, which are focused around high volume, because not all the time, but a lot of the times, if that pattern that you're hunting for is also accompanied with heavy volume, your chances of that thing working go up significantly from a statistical standpoint. Now, before we move on to these guys right here, I did create some price alerts, you know, and this is around the Holly homework. Holly homework being, at the end of every day, what you're going to do is you're going to scan through all the Holly trades from Holly 1, Holly 2.0, and Holly Neo. And we're going to start peeking at the dailies and see if anything is interesting that we might want to set a price alert for. So I've perused all three Hollies today. I picked out the ones that I like. So I'll share the price alerts with you guys when we're done here to give you a little head start, and we'll see how those things do for the remainder of the week. And now let's talk about the turbo up, no resistance today, because as always, this thing just spits them out each and every day, depending on the day. Sometimes there's a lot more, some days there's a lot fewer, but most days it's always going to point us to something good, assuming we know what to look for. So turbo up, no resistance, we're going to go over these trades right here. The turbo up, no resistance, let's take a little peek here. It's a multi-strategy window. It's got three different strategies. It's all the same strategy, but what I've done is I've partitioned them into stocks above 4 billion market cap, between 2 and 4, and sub 2 billion. Now today we got examples from each market cap group. We got EW from the big boys, we got GDOT from the 2 to 4 billion, and we got PS from the sub 2 billion. All some really nice, clean, high volume setups. So let's take a peek at what this guy yielded. So I've pulled these guys out of this window, but of course, if we were to go through and examine the history, we would see all these guys with their corresponding color. The green ones are the 4 billion and higher, the blues are between 2 and 4 billion, and the yellow colors are going to be the sub 2 billion. I'm just not scrolling back because they all kind of quit coming through, or unless I accidentally, I accidentally unchecked it. That's why they're not coming through. Okay, there we go. So first off, let's take a look at EW that came through. All right, so here we go, EW. Flagged it on this 15-minute candle right here. Now, what are we looking at here? What is the pattern, Jamie? Well, the pattern is about as simple of a pattern as you could ever hope to hunt, and that is a simple range break from the open. All right, this being the first 15-minute bar here, and here's the one where we got the call. Let me just pull this over here. So what I've done is I've just popped that strategy out into a standalone alert window, pointed it only to EW so we can see all of the hits here. Now, this is using new high as the alert because a stock cannot be breaking that plane without hitting a new high. And of course, it's all about timing, right? There's no way that I'm going to be hitting all of the stocks that come through here. what I do is I pull them up. If the timing is lining up and the risk is in place, well, that's a good trade. So we can see right here, we get the alert, EW hitting a new high, meeting my 1 minute triple volume requirement. Interestingly enough, we can look down here and see at that time, not only was the 3x 1 minute volume satisfied, but it was almost at 7. And as it cruised through this level right here, it only picked up steam. So that's a great trade right there. We could have made the entry anywhere in that bar right here. And what would our risk be? Now, I used to use 5 minutes on the intraday, so I'd have to look back 3 to get a 15-minute look back. But since we're using 15-minute candles, we just have to take a look at the low right here, assuming it's already came back up. That was a nice stable stop loss as it pushed through and continued. And look what we got here. We got a nice tight risk area and a big fat reward area right here. Actually, one of the stronger stocks today that I saw because it didn't really pull back that much off of its top. The added benefit of these guys, when we look over here and we do the look to the left on the daily, try to figure out where it might bump its head, the good news is it's out of its box. We've got the same pattern here to get us in on the intraday with a nice snuggly stop loss, the breakout pattern here, and we also notice, hey, it's doing the same thing right here. It's what we refer to as a fractal pattern. It's another reason why I like these so much, because same pattern here, same pattern here. All the great technicians will tell you when you get them to line up, same pattern on different time frames, well then even better. So that was EW from the 4 billion and higher. Next we had GDOT from the 2 to 4 billion. Once again, same pattern, right? If we're using the hunting analogy, this is the animal that we're looking for. Nice tight little consolidation and a break using new high. We got our 15-minute look back right here. You know, this one didn't really just take off, but it never really presented a threat. You know, got about halfway down to our stop loss. This was very characteristic of a lot of stocks today. Just a grind sideways and eventually a nice move higher to end the day. Once we look over here, we got the same song and dance. Got way too many lines up here now. But if I kill a couple of those, we can see we've got the same pattern emerging here that we do on the daily. So it's never a guarantee that we're just going to have multiple days up, up, up. But having no resistance to bump into here is definitely a very good characteristic of a long that is pumping some massive volume today. And of course, that guy finished 1.43. Let's see what EW finished, 1.23. And then from the smaller guys, we had PS. And, you know, same old song and dance here. We get a little run up, we get a little flagging action, and then as it gathers steam through here and pushes through and the volume is still there, finish the day here. This one didn't finish with a high relative volume, but during the time that the penetration was made right here, the volume was good. We can quickly see down here, volume was strong, strong, strong. 15-minute look back right here, and then our reward area, once again, much bigger than our risk area. And the added benefit, you know, this is actually a newer issue, right? So it can kind of go either way with these guys. We had one last week that I was keeping my eyes on. It busted out and rolled over. So just always keep that in mind. When you see, you tighten your chart up, and that's as far back as it goes, keep in mind it's a new issue. These things can be a little bit more shifty than ones that have really long, you know, histories on the daily. So those are the three, you know, that came through, one from each market cap. Of course, there were many other ones here today as well, just as there always are. But the name of the game is just getting used to identifying a nice tight consolidation break with low risk. And if you have that volume accompanying the move, well, it's simple, but it's very, very effective. All right, so a little time check here. We're doing fine. So now I'm going to grab my chat window here. And all right, I've got, let's see here, 1, 2, 3, 4, 5, 6 price alerts that I pulled from the Holly dailies here. I'm going to go ahead and right click. I'm going to share those alerts with you guys and drop them in the chat real quick here. So, Holly price alerts. Drop that in there. So you know what to do with that cloud link. Just copy it. File load from cloud. It will add these alerts to your price alerts. All right, I think we got through everything here and just in the nick of time here. So Steve, anything to add before I turn it over to Scott and let him give?
No, only that, a few people had some great questions of where is this new 3-bucket, 3-pool Holly going to go. We're going to continue to develop it to make it easier on the eyes and easier to understand what the difference is between those 3 pools. So more of that to be coming soon. So keep an eye out for that, more information.
True, and what I will add before I bring Scott in here is that, ever since Holly 1.0 started catching traction and really putting a big gap between the S&P 500, we've had tons and tons of people asking, well, I've got Brokerage Plus for interactive brokers, and I'm doing quite well using that with my own strategies, but I really would like to trade some of these Holly strategies. And we are headed down that path. Before too much longer, people will be able to auto trade the Holly strategies. But from a practical standpoint, if we had everybody going after the same trades on Holly 1.0, well, then those trades might get a little crowded, right?
I have one more thing to add real quick. If you could just pull up any single Holly symbol today. We don't have auto trading, but we have one-click trading, guys. Don't forget, if you do have an IB account or you want to go for one click, you like this trade, right click, send to IB, and then the order gets sent automatically. At the top there, it says trade, SCWH. And since we're not connected to Brokerage Plus, that's not a valid connection there, but that is a great example of how we're a step closer to auto trading, but it's one-click trading. Right-click, trade, go long, and you'll have all of your risk parameters already configured in the Brokerage Plus platform. So for those that are adept on using the Brokerage Plus, we can, at this point, one-click trade the Holly trades, but we're not at the auto trading point yet. There's still a lot of work to do there.
True. So right now there's 3. Who knows how many there are going to be in the future? I have the sneaking suspicion that 3 is not going to be the upper limit here. So, just wanted to give you guys a little feedback as to, hey, why are we creating more AIs? Well, it's not just more is better. There is a method to the madness here. All right, so it's about that time. If you're a standard subscriber and would like to save a little bit of money on your premium upgrade, Scott's going to tell you how you can do that. If you're not a subscriber, you can also save money if you're signing up for the first time, whether it's standard or premium. So Scott, if you're ready, come on in and tell them how they can save a little bit of do-re-mi.
Yeah, thank you. So on the way out, a couple items. We have a podcast. A new episode was out last week. Make sure you're subscribed. There'll be another one out on Friday. Just search for Trade Ideas Podcast wherever you listen to your podcast. It'll come up. Hit the subscribe button. Add it to your queue. Get the last couple of episodes and then get the newest one when it comes out. They're not long, usually under 30 minutes, so they're easily digestible and lots of good stuff. Find everything you want to know about the new Hollies in there too. The last couple of episodes, we've talked about it quite a bit. We also have a code for you that's good this month, Holly Summer. All caps. It's case sensitive. Just use that when you're starting your subscription to save 15% off any subscription with Trade Ideas. Or you can use that to upgrade from standard to premium. If you're a standard subscriber and want to get into premium, just go to the homepage and click in the login button on the upper right. Log in and then select the change my subscription thing from the navigation bar on the right and use that code. Save you some money on the upgrade and get premium access to Holly. Any questions, just shoot us an email, info@trade-ideas.com. That goes directly to our help software. Or you can follow Jamie on Twitter. He's at QuantBot. Steve Gomez is at Today Trader. Dan Merkin's Trade Ideas 1. The general one's Trade Ideas. We've also got a few other handles. Facebook.com/Trade Ideas Pro is the place to follow us on Facebook so you can share everything we post with all your friends. And Any other questions? Shoot it to that email. Thanks, everyone. We'll have the recording up later on tonight or tomorrow morning. Later, y'all.